Okay, let's unpack this. Ever catch yourself wondering about the real financial story behind those everyday online transactions?
Hmm.
Today, we're diving deep into the numbers and, well, the future of one of the biggest names in global commerce to find out what's really going on.
Specifically, we are zeroing in on PayPal's first quarter of 2025.
Mm-hmm.
The report just dropped on April 29th, and yeah, we've got a stack of information to sift through.
Exactly. We've got their official earnings presentation, the full earnings release, with all the nitty-gritty details, and also a handful of news articles. They offer some pretty interesting outside perspectives on what these results actually mean.
Right, and our goal here, really, is to cut through the jargon, cut through all the noise, and just give you the key takeaways.
Yeah, we want you to walk away with a clear understanding of PayPal's current position, where they might be heading, without feeling like you've just read a financial textbook.
Definitely not the goal.
All right, so let's get straight into it. Their overall financial performance for the first 3 months of 2025. The headline number is net revenues reaching $7.8 billion.
Okay, so that's a 1% increase compared to the same time last year. It's actually 2% if you factor out currency exchange rate fluctuations, which can, you know, skew the picture a bit.
Okay, 1 or 2%.
Yeah.
But here's where it gets, I think, really interesting. The transaction margin dollars, let's just call that TMO maybe.
Yeah, TMA, good shorthand.
Okay, so that figure jumped up by a much more significant 7%, hit $3.7 billion.
And that 7% increase in TM1,
Yeah.
it holds even when you take out the interest PayPal earns on the money just sitting in customer accounts.
Ah, okay.
What's kind of fascinating here is that this really suggests their core business, processing transactions is becoming substantially more profitable. Quite a difference from that top-line revenue growth.
Yeah, that really stands out. We also saw some big moves in their operating income. The GAAP operating income that's generally accepted accounting principles, it surged by 31% to $1.5 billion.
Wow, 31%.
Mark. But then the non-GAAP operating income, which, sometimes excludes certain items, that increased by a lower 16% to $1.6 billion. So why the big difference there?
Yeah, that's a great question. So non-GAAP numbers often try to give you a picture of the company's sort of ongoing operational performance, right? They
Right.
exclude things like maybe one-time restructuring costs or amortization of assets from acquisitions.
Okay.
The fact that the GAAP number jumped so much more could indicate those excluded items maybe had less of a negative impact this quarter compared to last year. It might be worth digging into the release later if you're
Yeah.
really curious about the exact exclusions.
Got it. And that profitability, it really shines through when we look at their operating margins too, doesn't it?
Absolutely.
The GAAP operating margin expanded dramatically by 447 basis points, up to 19.6%. Now, just for context, 100 basis points is 1 percentage point, so that's a huge jump, over 4%.
It really is. And the non-GAAP operating margin also saw a very healthy increase, 257 basis points, reaching 20.7%.
That's significant.
Yeah, this kind of margin expansion, it really points towards increased efficiency in their operations and maybe, perhaps, stronger pricing power in some parts of their business.
Right. Okay, finally on the financials. Let's talk about earnings per share, how much money they're making per share. GAAP EPS jumped by a notable 56% to $1.29. Now, they did say this number included a positive impact from their strategic investments.
Right, that's key. And the non-GAAP EPS also rose, but at a slower pace, 23%, reaching $1.33.
So the non-GAAP is trying to smooth things out.
Exactly. The fact that GAAP EPS saw that bigger jump because of these strategic investments, it suggests that those might be, one-time gains, or maybe accounting adjustments that don't necessarily reflect the ongoing profitability of PayPal's core operations day-to-day. Non-GAAP tries to give you that clearer picture of the regular business performance.
Okay, that makes sense. So the overall financial picture looks pretty strong, particularly on the profitability side. Impressive margin expansion.
Yeah.
But what about the nuts and bolts of the business? Let's dive into some of those key operational metrics.
Okay, so total payment volume, or TPV, that's the total value of all the transactions they processed, that grew by 3% to $417.2 billion, or 4% if you adjust for currency.
Okay, so more money flowing through the system overall.
Right.
However, the number of individual payment transactions actually decreased by 7% to 6.0 billion. Now, that might sound a bit alarming at first glance.
It does, yeah. But here's a really crucial distinction. If you take out the transactions related to their payment service provider business, Let's call that PSP for
I
short.
get PSSP.
Right. If you exclude PSP, the number of transactions actually increased by 6%.
Oh, interesting.
Yeah. So it tells us there's a pretty significant shift happening in the types of transactions they're processing. Less of one kind, more of another.
Okay. And we see a similar kind of story when we look at payment transactions per active account, TPA, right?
Another 2 page.
On average, over the last year, that metric slightly decreased, down 1% to 59.4.
But again, same pattern. When you exclude those PSP transactions, the TPA actually went up by 4%.
So users are actually using it more, excluding that PSP piece.
It looks like it. Their core active users seem to be using the platform more often, even if the overall transaction count is down because of those changes in the PSP segment.
Right. And speaking of users, what about the actual number of active accounts?
That did increase, up 2% year over year, reaching 436 million active accounts.
Okay.
And they even added 1.5 million new accounts just in the last quarter. That's about a 0.3% increase sequentially. So yeah, their user base is still growing, maybe just not at that, breakneck speed we saw a few years ago.
Gotcha. So these operational metrics, they really paint a more detailed picture, don't they?
They really do. While the total number of transactions is down, which seems like a result of that price-to-value strategy in the PSP segment, something we should probably touch on more.
Yeah, let's definitely come back to that.
Right. But despite that, their main customer-facing business, the branded stuff, seems to be driving more activity from their existing users.
Okay, that brings us nicely then to how the different parts of their business are performing. The earnings presentation gave us some good color here.
Absolutely. Their branded experiences, TPV. So think things like the PayPal and Venmo debit cards, and just the regular PayPal and Venmo checkout options you see everywhere online.
Right, it's familiar buttons.
Exactly. That saw solid 8% growth. That's both as reported and when you adjust for currency, and even for the extra leap day in February this year.
Okay, 8% on branded. And drilling down even further, the TPV specifically from that branded online checkout also grew by a healthy 6%.
Yeah, also 6% excluding the leap day impact. So steady growth there.
But what seems particularly noteworthy is the performance of Venmo.
Oh, definitely. Venmo was really impressive this quarter. Their revenue growth accelerated sharply up to 20%.
Wow, 20%?
Yeah. And the value of transactions going through Pay with Venmo. Using Venmo to pay businesses, that shot up by over 50%.
50? That's huge.
It is huge. Plus, the number of people actively using their Venmo debit card each month grew by around 40%. So, it's clear Venmo is a major engine of growth for PayPal right now.
No kidding. Okay, so Venmo's firing on all cylinders. On the flip side, though, you mentioned the PSP business earlier. The growth in TPV from PSP slowed down to just 2%, even when you adjust for currency.
Right.
And the presentation mentioned this was sort of on purpose, tied to their price-to-value strategy. What exactly does that mean, and what's the trade-off here?
Yeah, good question. Essentially, it seems like they're prioritizing making more money per transaction in that PSP segment. Being more selective, perhaps.
Okay.
Even if it means some, maybe lower margin partners might move to cheaper alternatives. This results in slower overall growth in the volume of those PSP transactions.
Right, makes sense.
But while this slows down TPV growth in that specific area, it directly contributes to that increase we saw earlier in their overall transaction margin dollars, the TMA.
Ah, okay, so they're sacrificing some volume growth for better profitability within that segment.
That seems to be the strategy, yes. It's a trade-off. You'd want to keep an eye on their PSP client retention and acquisition rates in future reports to see how sustainable this is long-term.
Good point. And finally, the TTV from peer-to-peer payments, sending money to friends and other consumer stuff, grew by a respectable 8% after accounting for currency.
Right. So overall, it looks like the parts of the business that directly involve consumers, the branded side, P2P, Venmo, they're generally performing quite well.
It seems the strategic moves they're making are gaining traction in those key areas that, directly engage their user base.
Exactly. And the presentation did highlight some of these strategic moves specifically.
Like what?
Well, for instance, they mentioned they've gotten over 45% of their online checkout traffic in the U.S. onto their newer, updated checkout experience.
Okay, so progress on rolling out the new tech.
Right, which suggests they're making good progress in improving how people actually pay. That could lead to more completed purchases, happier customers, fewer abandoned carts.
Makes sense. They also added about 2 million people who used a PayPal or Venmo debit card for the first time in Q1.
Yeah, that's another good sign. Shows they're successfully getting more people to actually adopt and use their cards, not just have the app.
And their platform seems to be evolving beyond just payments too, right? They mentioned adding crypto stuff.
They did. They've added support for digital assets like Solana and Chainlink in their PayPal and Venmo wallets, and they're even offering rewards to people who hold their PYUSD stablecoin.
Hmm. So branching out a bit.
Yeah, these moves indicate they're definitely looking to tap into the growing interest in digital assets. You want to watch future reports, obviously, to see how much their users actually embrace these features. Is it niche or mainstream?
Right. Is it driving real engagement? We also saw some specific partnerships mentioned, things like optimized debit routing with Wayfair and Upwork, and fraud protection advanced with Regal Cinemas.
Yeah, those sound like pretty concrete examples of how they're using their technology to provide, real tangible value to specific businesses, not just abstract platform features.
And there was that mention of the first remote model context protocol server, MCP, for agentic commerce. That sounded a bit futuristic.
That does sound a bit techy, yeah, but it could be quite important down the line. Basically, think of the MCP server as a key piece of infrastructure. It'll allow future AI-powered shopping assistants, think agents, that shop for you to interact more seamlessly and securely with platforms like PayPal.
Ah, okay. So laying groundwork for AI shopping.
Kind of. It's groundwork for potentially a very different online shopping experience in the future where AI could handle more of the transaction process for you. It's early days, but it's strategic.
Interesting. All this activity, of course, involves money moving around. Let's take a look at their cash flow and how they're using their capital.
Sure. So they generated $1.2 billion in cash from their operations in the quarter. And their free cash flow, that's the cash left over after capital expenditures, what they can use for other things, was $1.0 billion.
Okay.
Interestingly, they also gave an adjusted number. If you exclude a temporary timing issue related to their buy now, pay later business, specifically in Europe, their adjusted free cash flow was actually higher at $1.4 billion.
Right. And they're giving a significant chunk of money back to their shareholders too, aren't they?
They are indeed. In the first quarter alone, they bought back approximately 19 million of their own shares, spent about $1.5 billion doing that.
Wow, $1.5 billion in one quarter.
And if you look at the past year, the trailing 12 months, they've returned a total of $6.0 billion to stockholders through these share repurchases.
So that's a pretty significant return of capital.
It is. It suggests management either believes their stock is undervalued, or it's just a core part of their strategy to boost shareholder value by reducing the share count.
Okay. Now, here's maybe the most talked about point. Despite what looks like a pretty good first quarter, especially on profitability,
Right.
PayPal decided to stick with their original financial forecast for the full year 2025. They're still projecting non-GAAP EPS in the range of $4.95 to $5.10. No raise.
Yeah, that definitely caught people's attention. And for the second quarter, Q2 2025, they're expecting non-GAAP EPS of $1.29 to $1.31. So pretty much in line with Q1's actual results.
The fact that they didn't raise the full year guidance after that strong Q1 beat, that's an interesting signal, isn't it?
It really is. And the news reports, I think Bloomberg Tax and Stock Titan specifically mentioned the company cited uncertainty in the global macro environment as the main reason for this cautious approach.
Okay, macro uncertainty.
Yeah. And another source, xtb.com, also pointed to potential impacts from things like tariffs and government policies adding to that uncertainty.
So it sounds like while their internal performance is solid, they're being pretty careful about potential headwinds coming from the broader economy in the months ahead. They're not getting carried away by one good quarter.
That seems to be exactly the message. Prudence.
And that kind of aligns with what analysts were expecting, at least on the revenue side, right? I saw xtb.com noted PayPal's actual revenue, that $7.79 billion.
Just under $7.8 billion.
It was slightly below the market's expectation, which was around $7.85 billion. So a slight miss on the top line.
Correct. However, they did surprise analysts quite positively on earnings. That adjusted EPS of $1.33 was significantly better than the $1.16 that analysts were generally expecting, again, according to xtb.com.
Okay, so more profitable than anticipated, even if revenue was just a tad lower than hoped.
Exactly. Beat on the bottom line, slight miss on the top line.
And Stock Titan highlighted that this decision, to maintain guidance, it really suggests management is being careful, even though they acknowledged it was a great start to the year.
Right. Cautious optimism, maybe. And Stock Titan also emphasized that the strategic shift we've been discussing that focus on efficiency, on making each transaction more profitable, is really starting to become apparent in these results. You can see it working.
Okay. So pulling all of this information together then,
Mhm.
from the earnings release, the presentation, the news articles, what are the key things we should really take away from PayPal's first quarter performance?
Okay, well, firstly, I think it's clear they're making significant progress in boosting their profitability and running their operations more efficiently. You see it in the margins?
Yeah, the margin expansion was pretty striking.
Definitely. And they're achieving this even with relatively modest growth in that
Hmm.
overall top-line revenue number.
Right. Secondly,
Secondly, their core business that directly serves consumers, especially when you sort of mentally exclude that wholesale like PSP segment, it's showing pretty good levels of activity and growth,
huh.
particularly with their branded online checkout options. And of course, Venmo.
Ah, yes, Venmo. That seems crucial.
It really does.
Yeah.
The continued strong growth of Venmo is definitely a major highlight. It's clearly evolving beyond just a way to send money to friends. It's becoming a really significant driver of their overall business results.
Okay. What else?
Thirdly, I think we can't overlook the fact that they're actively buying back their own stock. That consistent, large return of capital to shareholders is something investors definitely pay attention to. $6 billion over the year is substantial.
Yeah, that's a big commitment. And finally,
Finally, and this is maybe the big question mark hanging over things, the fact that they're holding steady on their full-year forecast. Despite that strong Q1, citing those broader economic uncertainties, that's a really important signal.
right. It makes you wonder, doesn't it, about the potential impact of the economy on consumer spending and how that might ripple through the whole payments industry in the coming year.
Exactly. Are they seeing something specific, or is it just general caution?
So, okay, let's try and summarize our deep dive here. PayPal is showing stronger profits, much better margins, a bit of a mixed picture in overall transaction volume, but definitely a positive trend in their main customer-facing branded business.
Right. And Venmo is just continuing its impressive ongoing growth. That's key.
Yeah, definitely. But all this is paired with a maintained, somewhat cautious outlook for the rest of the year, explicitly because of that uncertain global economy.
Yep, that sums it up pretty well. Which brings us, I guess, to a final question for you, the listener, to consider.
Yeah, something to chew on.
Given PayPal's current focus on efficiency, on profitability, and pairing that with this unpredictable global economic landscape, what do you see as their biggest opportunities and maybe their biggest hurdles to achieving sustained profitable growth over the long term?
Good question. And also, how should we interpret that decision not to raise their financial forecast? Should we see it purely as sensible caution, prudent management, or could it perhaps hint at some deeper underlying concerns about what might lie ahead for the economy or their business?
Yeah, prudence or pessimism? It's a key question right now,
Definitely something to think about. Now, if you are interested in digging even deeper into these numbers yourself,
which we always encourage.
absolutely. We definitely encourage you to head over to PayPal's investor relations website. You'll find all the full reports, the presentation slides, supplemental data. It's all there.
Yeah, plenty to dig into if you want the full picture. And I guess we'll definitely be keeping a close eye on their next earnings announcement, see how these trends continue to play out in the coming months.
For sure. It'll be interesting to see if the caution was warranted or if they outperform again.